All right, good evening, traders. Good evening, everybody. Welcome to Miss Mary's Sunday class. Today we have an agenda. We are going to learn, hold on, let me just see this. What are our agenda today? Okay, basic terminology. What is the difference between scaling up, scaling down, scalping, and momentum? Vacillate. What is long and short, leap and skip? And we also identifying the candles. What are the breakout candles? What are the breaking candles? And the rejection candles? What do they look like? And then we also have this one pattern, particular pattern. It's called the 3 inside up and 3 inside down. This is a candlestick pattern that will help us utilize for our trading. We're gonna have a busy night, so we have 1 hour class. So please keep your questions to the end until we finish with the class, okay? Because we have about like 20 or 20 more than 20 slides that we have to go over. So please keep your questions at the last moment. I'm going ahead and share my screen with you. Hold on. This doesn't help. Hold on. Share my screen. Can you guys see my screen? Hey, Race, how you feel, Race? Thank you. Let me see if this will work as well. Let me see. Can you guys see this?
Says ready to learn.
Yes.
Yep, that's it.
All right.
Yeah,
Let
we
me
can see
see
it.
if you could be able to utilize. See my actual presentation. Oh, I click on it. Can you guys see it?
Nothing's changed.
Nothing changed. Okay, so YouTube is showing it, and you guys are not showing it. All right. Let
That's
me
weird.
just click on it. I guess my presentation has to be different from you guys. Let's see if this will work. That's not good. Okay, let me just pause it again. I guess I cannot share it as a presentation. I gotta
Miss
have
Mary,
to share.
once you start the presentation, share the screen. That might work.
How do you do it, Jerry? So,
Once you click on the presentation, then share that presentation itself.
okay, let me see. Because it will not allow me to do it. Like, hold on, let me see it again. Present. Now I cannot see you guys. Okay, hold on. Can you? No, it will not allow me. It really won't allow me. All right, so I guess we're gonna have to do it this way. All right, so this is our agenda for today. Can you guys see it on my screen now? I cannot use it as
Yes.
a presentation.
Yeah.
All right, so
Yeah.
basic terminology of trading today, scale, scalping. This could be a little bit basic for some of you guys, introduction, but others might be a little bit on the intermediate level. So those people who doesn't know some basic terminology, you could get benefited for this. But I know most of you guys will get benefited with what number 2 and number 3. That's just maybe perhaps it's your review time, but for beginners class, please pay attention to this. This is a basic terminology. Some of you guys don't even know what it means. So scaling, I know most of you hears a lot of saying I'm going to scale in, I'm going to scale out. So when simply saying I'm going to scaling, I'm going to scaling, I'm scaling in, it means you're gradually buying into a trade instead of investing all at once. Okay, when you scale in, it means you're adding a position. Okay, you're slowly adding your position. When you're trading, you don't necessarily buy all at once. It's always better to cut your position into at least either 50% and add it to an additional 50% once you see the actual directions of the trend. Others scale in. Let's say I'm going to start with one position and then you're going to scale up once the trend continued to your favor. So you scale in, you add your position. You scale down means you're buying more when the price drops, or when you scale down. Yeah, it is when you scale down, right? You scale down, you cutting down your position to the downside. Sometimes when you are in profit, what do? You start taking some of your profit. So you're scaling out. Okay. So there is a risk associated with scaling down and scaling up, right? When you scale up, you add more position. Remember, scaling up, you're adding more position. You're scaling down, you're reducing your position. Those days that we have to scale down to reduce our risk, let's say, or also to lock in your profit. So if the trend continue to go up, right? If the trend continue to go up, so let's say you enter here, there's your take profit level. So you scale down here to lock in this profit. It means you reduce your position. And then you reduce another position when you take profit level number 2. You scale down again. And then you ended up having a runner. So the runner is the one that will actually maximize the whole profit and maximize the whole trend. And this will either get you either 100%, 200%. But the point of scaling down or scaling up is manage your risk. Okay, so when you say scale, you add a position. When you scale down, you reduce your position to either lock in your profit, and of course, managing your risk. So benefits of scaling. Scaling allows traders to manage risk by gradually building a position rather than investing all at once. Some of you guys enter a position when I say, okay, this is a buying opportunity, this is an early entry. What do you guys do? Others, they scale in. They start with a small position. Some of us, what do? We buy big. No. We don't want to buy big when we just enter that position. We want to test the water. So start with a small position. You could always scale up when the momentum continues to go to your favor. Make sense? Next. This thing is just bothering me. Scalping versus momentum. You guys do scalping with me, it means it's a small profit that stack up together. Okay, we don't aim for a 100% or home run. However, if the market allows us to give us 100%, why not? But it's not always guaranteed. When you're scalping, it also depends on your personality. Okay, if you don't have the patience and if you're very emotional, scalping is not for you. Scalping is very focused, quick, and you have to be decisive. You cannot hesitate. You cannot doubt. So scalping is a high frequency trading method where traders make a quick and small profits by entering and exiting trades within seconds or minutes. It focuses on tiny price movements and requires fast execution. So if you're going to hesitate, even when you try to enter that position, if you're hesitating, you're already missing that level, and you're already missing that move. Okay, one of the reason why I do my morning huddle and my power hour via Zoom is to avoid that lagging, because there's a lag between 5 to 10 seconds. So if you miss that signal that I said there is a entry here and you have to wait 5 to 10%, you just miss that move. Okay, because scalping has to be quick. You have to be quick. We don't hold scalping the next day. So that means that could be a swing trade. Okay, scalping is you buy your position today, you sell your position today. If you're going for a SPY and let's say it's early in the morning, you could get away with a 0 DTE, but if you're doing a power hour, please use a 1-day expiration instead. I know the goal is to exit in and out today. You could use your 0 DTE, but during power hour, your delta and your theta is going against you. So the delta reduces its value, and theta is also kicking in if you use a 0 DTE during power hour. So scalping, your goal is to get out today. You enter today, you get out today within either seconds or minutes. That's scalping. Okay. Momentum trading. Momentum trading could be swing, could be scalping, could be long term. When you say momentum, it means you're riding with a strong move to the upside or to the downside. It involves riding strong price trends over a longer period, aiming to profit from continued movement in one direction. Traders look for assets with high volatility, strong momentum to maximize gains, and it can be short term, swing, or even long term. Ertuan is a momentum trader. When there's a dip, he buys. And he sells when what? When he goes all the way to the upside, right? That's momentum. You hold on to your position as long as it's still on your favor. As long as this is a strong ride either to the upside, if you're going long, if you're going short, as long as there's a strong move to the downside, you're going to have to hold on to it. And if there's any kind of early reversal, either directions, you need to get out. You could either hold this long term as a swing trader, or you could either long term investment or swing. Scalping also could be a momentum. What is scalping momentum looks like? When you see all green, 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 and then you see one red, that's your cue to exit your position. That's for scalping in a momentum trading, okay? So when you see all green, you ride that, baby. You ride that, and then you get out when there's a red. The same thing with the downside. If you see all red, all red, all red, and you see one cue of green, that's your cue to exit. That's for the momentum. For the swing, as long as it's continued to go up, follow your trend line, you're okay. You will continue with the momentum to the upside. Same thing with the opposite direction. Vacillate. Vacillate is simply saying indecisive movement, or what? Another word for vacillate, under consolidations, or they are trading within the range, right? Vacillating trading means indecisive movements. What does that look like? It looks like this. It's vacillating up and down within that trend. Okay, it means it's a decisive movement. There is no breakout to the upside, there's no breakdown to the downside. Okay, it often happens in a range bound market where price moves between the support and resistance without breaking out. So this is called vacillating. There's no clear direction. Okay, very simple, easy peasy so far, right? Long and short. You guys hear people saying we're going long, we're going short. Long is like you're going to buy an asset with the expectations that price will rise, allow you to sell at later profit. Short means sometimes we could just say we're going short. It means the price is going to continue to go down. So short means you're selling an asset you don't own, hoping a price will drop so you can buy it back again at the lower price and keep the difference as profit. Or you could just say, I'm going short. It means the price is going to come down. You're going long. It means the price is going to go up. Or going long, it's going to the price is the candle is going to go to the bullish trend. You're going short, the candle is going to go to the bearish trend. That's what it looks like. So if I'm going long, we're going to buy a call, or we're going to buy a position, a share. If I'm going short, it means you're either going to buy put, or what do? Another way for a going short for this, you buy put, or you could do an inverse for those people who wants to buy shares. Let's say there is an inverse for, what is the inverse for Amazon? What is the Ertuan, what is the inverse for Amazon? AM's, what, I forgot, what is the inverse Amazon, Ertuan?
It might be AMZZ.
AMZZ. Okay, so that's where you could go. You go short, you go against the position. I mean the stock. Let's say if there's an inverse for most of the stocks. So if you're going for Tesla, let's say this thing is going short, it's gonna come down. You trade the inverse of Tesla. What is it? TSLZ. right? Something like that.
TSLS.
TSLS. Okay. So those things you could utilize if you don't do options. Okay. You could buy shares that is inverse with position or inverse with Tesla. There's a lot of inverse ticker symbol for any stocks of your favorite stocks actually. So if you're short, price going down. If you're long, price going up. Okay. Leap and skip. A lot of you guys do a lot of leap and skip, but you don't know how to use them. Just because you're going for leap, you're going to stay for 1 year. It means you're going to buy a position or you're going to open a position with the expiration of 1 year. But just because you have a leap doesn't mean you're going to hold it for 1 year. When you're entering a leap, there is rules for this. Number one, make sure you avoid what? Events. What are those events? Earnings, right? You don't want to enter a leap just because there's earnings. Same thing with a skip. You don't want to enter a skip just because they're earnings. You have to make sure you get rid of those or at least surpasses those events before you're entering this position. Second, you have to have rules. Rules you enter your leap and skip. Your leap is a long-term equity anticipation securities, meaning that you're going for long-term expiration over 1 year. But it's not necessarily you're going to hold it for 1 year, because if your leap position goes south or pulls back, you could lose 50 to 100%. And let's say you have an expiration for next year and you got an Amazon and Amazon missed earnings. Now, what are you going to do? You're hoping, right? But Mary, I have 1 year leap for Amazon call. Well, good luck. You are either down 50 to 80%. You don't hope for that 50, 80%. You have to make sure you risk know your risk management. Okay. Just because you have leap and then you're losing 50, 80% doesn't mean you're going to hold on to it. You have to know your exit strategy. I might down 20%, I'm exiting. There's no problem re-entering this leap. You have to take a look at the chart and then say, hey, this could be just a possible short pullback. I'm okay holding 20%, but I'm not okay holding my leap position if I'm 50 or 80% down. That's not a good way to start your leap. Okay, same thing with the skip. Skip is not really a trading terminology. Traders use it. They use it safety, keeping it profit. Normally we hold on to skip 3 weeks. Okay, sometimes you could get out of your skip within 3 days. You don't hold all these long term, guys. You don't. Same thing with the leap. You don't really hold this long term just because you have a long expiration. And also, when you're using leap and skip, it's not necessarily means that you could do out of the money. And that is very scary. Yes, it's cheaper, it's attractive, but when the chart continue to pull back, you're out of the money, will definitely lose value. So there's a technique for leap and skip. Actually, there's a class with Tom on Monday, tomorrow, how to identify the great expiration and strike price when you're doing leap and skip. And there's a technique with that. Okay, don't just buy leap and skip blindfolded. Okay, what are skip or positions with the lifespan about 6 months? But can I hold this, Mary, 6 months? Of course you don't. You don't hold skip or leap 1 year. You don't hold skip 6 months. You have to make sure you have strategy too. Are you okay with 20%? What if, Mary, I just bought my skip today and then in 2 days I have 20 or 30%? Well, what is your exit strategy? 100%. Okay, that means you're gonna have to hold on to it until you have 100%. Now I'm gonna ask you, what if it doesn't reach that 100%? What if you only reach 50%? Are you okay to exit your position and take profit on the 50%? You have to ask yourself on that. Okay, this strategy involves exiting positions before earnings announcement to lock in profit. Absolutely. Also goes with the leap. Okay, but normally for skip, we don't really want to hold on to our position if there's earnings, especially for the skip. We don't want to hold our positions when there's earnings. The aim is to avoid risk associated with earnings uncertainties. Absolutely, especially right now, every time corporate or big lucrative company announce their earnings, normally it dips down. So be careful doing earnings play. Okay, it's pure gamble, so you might as well do. I'm not a financial advisor, but most of the time it becoming just a strong bearish move to the downside. I know I'm moving too fast because we have 1 hour today. Rejection candles versus breaking candles and a breakout candle. They all sound the same, but they don't look the same. Rejection candle shows that the price attempted to break a level but failed. It typically has a long wick. There's the hint there. Okay, for rejection candle, it's a long wick. It has a, hold on. It has a long wick, okay, with a small body, indicating that the buyers or sellers push the price back, rejecting the breakout attempt. I'm going to show you how it looks like. A breaking candle, just like it sounds. A breaking candle sometimes used interchangeably with a breakout candle, yes, but it also can refer to a candle that is in the process of breaking a level. That's your hint in there. In the process of breaking a level, but has not fully confirmed the breakout candle. Rejection is the wick. The breaking candle, let's say this is your resistance. There is a body of the candle that pierces through that resistance. This is a breaking candle. A breakout candle on the other hand is a strong candle that breaks out through a level. This is a breakout candle. This is your support. Pretend this is a support. This is a support. This is a rejection candle with the long wick. This is a breakout candle when it's pierced through the body of the candle. And this is a breakout candle when the candle is not touching any kind of levels or resistance. Okay? I'll show you what it looks like. This is what it looks like. This is, yes, but Mary, you said this is a breakout level. Let me just change that to white now. But Mary, it's touching. Oh, come on now. It's not so bad. This is a breaking candle. You see how the candle is pierced through their level? That's a breakout candle. This is a rejections, a bunch of rejections. What is the alternative name for this candle, by the way? You could call it out. What is the alternative name for this candle? Multiple tweezer bottom, right? Pretty strong resistance. I mean, pretty strong reversal to the upside. Rejection candle, you see the wick? This is a breakout candle. This is your resistance. Breakout candle, breaking candle, you see it's breaking through. Make sense? Rejection candle, breakout candle. So far, so good? All right. What about this? You guys tell me. What are these? You could call it out.
Rejection.
Rejection candle.
Rejection.
Very good.
Good.
Breakout.
Very good. No. No, no, no. This is not a breakout candle.
Breakthrough.
This is a breaking candle. Not fully confirmed. Look at that. You pierce through that resistance, okay? This is a breaking candle. What is this? Which one would you enter? Would you enter in the breaking candle or the breakout candle? Which one confirms the trade, by the way?
Breakout.
The breakout.
Very good.
Breakout.
It's a breakout. Because now it's free from here. It could give you a fake out, guys. If you enter here, this is aggressive entry. So if you enter in that position, by the way, this is your resistance. This is your breakout candle. This just retesting the support. This is now a resistance, becomes a support, is a buying opportunity. This is your fully breakout candle, enter the position. This is just a continuation, by the way. Now it's retesting half of that candle, but this confirms your trade. This is a breakout candle. This is a rejection. Oh, what is this candle? What candle is this?
Rejection.
Very good.
Rejection.
What pattern is this, by the way?
Oh, that's the M pattern.
It's an M pattern. Is that bullish or bearish?
Bearish.
But
Polish.
would I enter that position to go short if there's no breakout?
No.
No.
Very good. So where do I enter that position if I want to go short?
If it broke out.
Break down where?
Under resistance.
This is a resistance.
Under the support.
Support.
Very
Under
good.
support.
Very good. So we want a red or green candle here.
Red.
Green.
Very
A
good.
red candle.
Remember that. Red. Why you want a red?
Because it's down.
Very
Because
good.
it
What if
wanted to
there's
go
a green-
down.
What if there's a green there? Would you enter that position?
No.
Very
No.
good. Good job. Then where's our support? Where's our take profit level?
Support.
We're talking
Bottom
about
of the page.
put.
Yep.
Bottom
So-
support. Yeah.
Okay.
Yes.
Very good. Next, to the upside. Will this be our resistance?
Yes.
Yes.
So where do we enter this position?
Right.
When it breaks out.
Above
After
resistance.
it breaks out
Above.
at the
Yeah. After the breakout candle.
Is it this one or this
No.
one?
It's
That
the second one.
The second one.
the
Very
end.
good. Why can I enter here? Do you create a higher high?
It's an aggressive entry.
Very good. Because it could give us a fake out, right?
Yes.
Good
Yes.
job. And look at half of that candle. What did it do? Retest, right?
You test.
Yes.
Yes.
So we enter here, right? What is a good way to measure the take profit level if I don't know the resistance here? You have two choices: Fibonacci extension, Fibonacci retracement. This goes for Eddie.
Yes.
Eddie, what kind of Fibonacci will I use? I want to measure the pullback. I want to measure the pullback, the retrace. I want to measure the pullback. Which one Fibonacci am I going to use?
The retracement.
Very good. If I
Looking
want to
for-
measure the take profit level, which Fibonacci am I going to use?
Extension.
Very good. Do you guys understand that? If you want to measure the pullback, Eddie said, we use retracement. We measure that pullback. If you want to use another Fibonacci to exit our position, we use Fibonacci extension. Extension. Exit.
Right.
Okay? Retracement, just like retrace there, you're pulling back. Enter. You enter your position using retracement, Fibonacci retracement. This is all has nothing to do with the class, but I'm just giving it to you guys. All right. And what is this candle?
Doji.
Rejection. Breakout,
Yes.
breaking candle.
Rejection.
Rejection.
Very good. So this is a pretty strong rejection, agree?
Yes.
What is the pattern that I could see? Hey, there's a possible rejection there. And it's also what?
Double top.
Very good. Double top. And double top is bullish or bearish?
Bearish.
Bearish.
But look, we ended up consolidating here, guys. This is a descending channel. It's bullish. Can we say that this thing is going to continue to go up?
No.
Very good. Until we see what?
Green. A
Until
breakthrough.
it goes up.
Until we see a
Breakout.
breakout. Very good. Just
Yeah.
because there's a descending channel, it means that we're going to hold on to that. And I'm going to enter, I'm going to go, I call. No, we wait for what? A breakout candle. Remember, this is going to be your resistance here because this is the top of the pole. Okay?
Right.
And if there is a breakout here, again, use your Fibonacci extension to measure your resistance to take profit level. Okay, but this one, although this has a bearish signal, a bullish signal, you have a bullish pattern, you ended up having a breakdown, retest the support, right?
Yeah.
Okay, another one. What is this? This is the support. What kind of candle is
Rejection
this?
candle.
Rejection.
Very good.
Yeah.
Rejection. What candle is this?
Breaking.
That's a breakthrough, a
Breaking.
breaking camera.
Breaking.
Yeah.
Very good.
Breaking.
All right. So what kind of pattern is this?
Yeah. Tweezer.
Nope.
Is it a
H pattern.
evening star?
Morning.
Morning.
Morning
Morning
star.
star. Morning star.
Very
That's an
good.
evening star.
Oh, morning star. Okay.
All right. Just because you have a morning star pattern, where do we enter that trade?
On the
Above the
second
big red
candle.
candle.
Very good.
That's a big.
Anything, no breakout, no entry. Okay? No breakout, no entry. This is a morning star pattern. Yes, I'm going to enter. No, you wait. You wait. Okay? Did you see any breakout? Nope. Right here. You could use a shorter time frame to enter this trade. Okay, now you have a morning star pattern. Then you ended up, okay, Mary, there's no breakout. I cannot enter a call, or I cannot buy positions. I cannot buy, not position. I cannot buy shares. Okay, so we wait, right? We need to be patient. We have to be a turtle trader. Wait, and then we ended up another support here. What is this? What do you call this pattern?
Loser bottom.
Double bottom.
Double bottom.
Double bottom. Very good. Where do we enter this position? Again, use the morning star pattern, right? This serves as your neckline here.
Gotcha.
You could also say, Eddie, pay attention. Look at this W pattern, right?
Yeah.
Enter this
watch.
position, shorter time frame. And where's your resistance? This is not guaranteed, okay? All this resistance are not guaranteed. That's why I need you guys to draw 3 level of resistance, okay? This is 1, this is 2, and 3. These are not guaranteed, but at least if you have 3, somehow it's going to touch it. You see how it touches your first resistance right here? Multiple touch.
First taste profit.
Yep, first take profit. There's no, it's not a sin to take profit early. Not a sin. Don't listen to other people. Okay? Nothing is guaranteed. Tomorrow's not promised. If you have your first take profit level, it's okay. And don't compare yourself to others who took profit on the last level. You know, the key is to be consistent, not to be greedy. Consistency is the key. Not is not the one who got the higher time, who got the bigger profit. Okay, it's always not about that. All right, next one. Okay, we have another. What is this pattern again? Morning star pattern.
Star.
Yep, enter that trade. This is pretty good. But where's your resistance? Right here. But again, you have that resistance from the previous candle here. See that? You could utilize it. Of course, this is a weekly. You could go to the daily to see where is that pattern, draw your trend line. And then 30 minutes, you could enter that trade. All right, so far so good.
Yes.
Could you get in like early entry, like on that morning start?
This one?
Yeah,
You-
with
you
one
can.
contract on that bottom, on that candle, the breaking candle.
This
Once it closes and it start, once it breaks that one,
you could enter
start another green candle. Can you go in with the one contract? Just
as
to
long
test?
as it's right above the body of the first candle.
Right.
Okay, yes, you can. As long as the body of the candle, as long as the price is right above the body of the candle, yes. Aggressive entry rate, okay? The goal is to be above that candle here because
You
it
know
could
me.
reverse. Okay, one position if you want, but you need to wait for a full confirmation. At least I prefer to be above the wick, but here comes your half of that candle. So you gotta have to suck it up if it's really going to your favor. Always have a stop loss. All right, the next One is my favorite. It's the 3 inside up and the 3 inside down. That is a possible reversal to the upside and reversal to the downside. You guys have seen this multiple times. You just don't know the name, and you just don't know that that was actually a reversal. Okay, you need 3 candles. The first candle for the 3 inside up. This is a bullish pattern. The 3 inside up coming from the downtrend. Okay, hold on. What is going on? Okay, coming from the downtrend, you need 3 candles for the inside pattern. First, you have a large candle. Normally, this is red. Okay, the second one, you have an inside candle, which is green, or could be red, but normally we prefer green if this is from the downtrend. And then the last one is a bullish. This has to be a bullish candle. And this is a possible reversal to the upside. I'm going to show you guys how it looks like. This pattern suggests sellers are losing control and buyers are stepping in into a potential leading to an upward move, price move. You need 3 candles. I know it's a little bit vague right now, but I'm going to show you how it looks like. That's called the 3 inside up. This is what it looks like. I'm looking for my, there you go. Hold on. All right, this is a downtrend. Agree? This is your support. This is your first candle, bearish candle. You got the inside candle. It's called the inside bar candle. And then you have the third one. The third candle has to be above the second candle. Or sometimes it could be like this, but the goal is to be above the second candle and above the bearish candle. The goal here is most of the time they emphasize on the second candle. I emphasize more on the big bearish candle. I need to be above that big bearish candle to confirm. Make sense? This is called 3 inside up, not bar. 3 inside up. Now let's see how it looks like. You need a bearish candle, you need an inside candle, and then you need a close above at least the bearish candle. It has to be higher. The third candle has to be green and has to be higher. Mary, does it matter if this is green or red? Preferably green. Because what does that mean? This is a lot of selling pressure and the buyers comes in. Now let's see how it okay? Now let's see how it looks like on the real trade. This is what it looks like. This is your resistance. Actually, if you want to be more more conservative, you could put your resistance rise on that third candle. This is just too early. This is early, but the goal is one of the third candle. This is the rejection candle. This is called the 3 inside up. Your entry lies on the green bullish candle right above the third candle. Make sense?
Yes.
This is called inside bar. Inside, 3 inside up, sorry, on the downtrend, okay? It has to be the downtrend. Selling pressure continues, but buyers comes in. That's what it looks like. What's going on? Hold on. Hold on, guys.
Mary, is your teaching based, is this based on shares or is it on options or is there a difference?
Buy shares or options. It all depends on you. You could buy shares, you could buy options. If you want to do the shares, you just buy the share. You have to buy Lily at $792. It doesn't matter how much. If you're going to go for shares, if you're going to go for options, obviously you're going to get a call.
3 inside bar, is it
Exactly.
applicable for all the candles, like 5 minutes to 1 month? I see like we're in the 1 week time frame, right?
1 week is because you want to see where the market is going. I just want to pause it. I cannot pause it.
Does that concept go for if it's going down too? The inside candle going down?
The inside candle, the 3 inside up is a reversal to the upside. There is a reversal to the downside that is called the 3 inside down. We're gonna take a look at it.
Down, right.
But
Okay.
this is
Okay.
the candle of a reversal to the upside. Okay, I just want you guys to be familiarized with these 3 candles here. You got the bearish, you got the inside bar candle, and you have the third bullish candle that surpasses the bearish candle. Okay, so that's your resistance. Anything that breaks out of that confirms the reversal. I normally put my resistance right here. Let me just do this again. Trying to pause it. For some reason, when I pause, it just looks like this. I normally put my resistance here. Okay, confirms your trade to the upside. And this is the weekly. So the weekly takes obviously 5 days. So you draw your trend line here. You draw your trend line, and then you go to a shorter time frame. You take a look at the daily. Then you could enter in the 1 hour, 2 hours, or 4 hours, whichever you prefer, as long as it's right above your trend line. The goal is to be above your trend line. Okay. So that's your 3 inside up, and then your down looks like this. It's the same thing, but it's the opposite. Let me just delete that. You did 3 candles again, but you are coming from the uptrend. So you need first a large bullish candle. Remember the 3 inside up, you're starting with the red candle. But for the 3 inside down, you're starting off with a larger green candle, showing a strong buying pressure. The second candle, which is red candle, will be a inside bar candle, which means it has to be inside the green candle. That's your second candle, okay? And it has to be red. It has to be red. Same thing with the opposite candle. The other pattern, the 3 inside up. The 3 inside up, we have the red, and then we have the green inside, and then another green. But to the 3 inside down, we have the green, and we have the red, another red. Okay, just keep that in mind. I know it's a little bit confusing, but I'm going to show you how it looks like. So your first candle coming from the uptrend, you have a green candle, more buying pressures. And then the second candle will be the inside bar candle, which is the red, which is slowing down of that trend to the upside. And the third candle will be the bearish candle that closes below the second candle, confirming the reversal. So this pattern suggests a buyer's losing control and sellers are stepping in, potentially leading to a downward price movements. So how it looks like this. Okay, so we have a little bit of an uptrend and then a possible reversal to the downside. So this is your resistance. This is a green bullish candle. You have an inside bar candle, and then you have the third bearish candle. So in an uptrend, you need green, red, and red. The goal is, they call it 3 inside up or 3 inside down, is because of the inside bar candle on the second candle. Okay, this is an early signal. The inside bar candle is an early signal of a reversal. Now, the 3 inside down is a 3 candle. The inside bar candle is a 1 candle. They are both reversal, but this is more stronger compared to the inside bar candle because it's giving you more confirmation to the downside. Because the inside bar candle is just a 1 candle. 3 inside down is 3 candle pattern. Does that make sense?
Yes.
All right. This is what it looks like. Let's go ahead and press play. Confirms your trade. You have a breaking candle, confirms your trade. Obviously, you have just a very short support. You're looking at the 1 hour. This is SPY as well. So this is your support, which could extend it to the wick, which it did. Do it again. Retesting that, retesting the support. which now a resistance. And then the next day, nothing breaks out of that resistance. So it's just retesting the resistance continuation to the downside. Make sense? All right, that is for today. I know it's a little bit too fast, but I'm trying to give you guys a little bit of nugget of wisdom on every Sunday class that I shared with you guys. You like to join the class. I just joined, watched it from the beginning. YouTube is being recorded, so you guys could be able to review this again. Okay, so YouTube is being recorded, so go check the YouTube channel of mine and watch it over and over again. All right, question related to the class. Eddie, I cannot hear you. Eddie, you're muted. The hold on, Eddie. The 3 inside candle is a 3 pattern. Harami is inside, it's like an inside candle. It's a 1 candle. Okay, but they are reversal. That is correct. Big D. Yep. Yes, Eddie. Question. Okay. Or Eddie is being muted. Can you trade these patterns on the shorter time frame? Of course. You could be able, every time you identify these level, when you identify these levels, you could, let's say you saw this on the 5 minutes. Obviously, you're going to stick to that 5 minutes because you could use it for scalping. If you saw this on the larger time frame, perhaps you could use that for swing trading. Make sense? If you see this in the shorter time frame, 5, 10, 15 minutes, there is a higher chance that you could actually do this scalping, because those 3 inside bar candle, 3 inside up and 3 inside down are rejections, reversal to the upside or to the downside. By the way, Yolanda, are you here? I would like to say thank you for your generosity. She had sent me some beautiful bracelet and such a heartwarming letter that she. Oh, Yolanda, thank you so much. Oh, I forgot. I have my hat here too. And Yolanda had given me a hat. That's so pretty, Yolanda, by the way. So thank you so much, Yolanda. So I opened it actually during Valentine's. I was like, oh my God, Yolanda, that's so nice of you. It's so cute. So I'm gonna wear it, and this is a sticker, by the way. So I'm going to record a class and record some short video. And thank you, Yolanda. I love it. It's nice. Oh, thanks. I love hats, by the way. It says Miss Mary, Mindful Trader. I love it. I really like it. It's actually nice. I should use it as my logo, Yolanda. I don't have a logo yet, so it's really pretty. I love it. Thank you, Yolanda. And I love the bracelet. First of all, I love your letter. It just warms my heart. And my husband was like, "What are you smiling about?" I'm like, "Yolanda." I was like, "Who's Yolanda?" Oh, hon, you don't know anything about my Discord, so it's okay. He was like, where did you get that from? The Discord, hon. I'm like, they send you something? I'm like, yeah, hon, they love me. She's like so nice and so cute. Well, thank you guys. But anyways, questions. Thank you, Yolanda. Questions with the class.
I have one. Can you hear me?
Of course I could hear you. Okay.
Do you have a certain rule when you're trading this pattern? Do you have a certain rule for where you put stop losses?
Sure. Stop loss is subjective, right? Others use percentage, others use levels, others use candles. Okay, so let's go ahead and do a replay for this. Although stop loss is not part of our class today, but it's okay. Let's go ahead and this is a pattern, right? This is a pattern. Or we could say this is under consolidation, or we're vacillating from this resistance to the support. Right? So we could say it's under consolidation and it's in range. Anything that breaks above the VWAP and breaks above the resistance confirms the trade to the upside, and anything that breaks to the downside, there is a possible take profit level. Take profit level, right? So let's pretend that we got a call. Let's see where this thing going anyways. This is a replay anyways. Okay. You will definitely see this, by the way. It's resistance. Let's say you got a short, you got a put, right? You got a put. And it goes take profit. Obviously, you take profit. And let's pretend you did not take profit, because why? We always have an excuse. I did not see my candles, or one of our excuses, I got distracted, right? So if we got distracted, please reevaluate ourselves and say, hey, why did I get distracted? I cannot get distracted if I'm scalping. Okay, now it goes the opposite direction. Now, where is my stop loss here, Mary? Two things that you have a stop loss. Either one, wait for a possible rejections of the VWAP. Anything that breaks above the VWAP, no bueno. Why? Because there's a higher chance it's going to go to the upside. Two, if you did not take profit, you could either do break even, Eddie. Three, if you did not have a break even because it moved so fast, you could do 5 to 10%. Four, you could wait for a candle that breaks out above this big bearish candle, or you could wait anything that above here, a possible move to the upside. So you could have a stop loss here if you want to. But Mary, that's such a big gap from entering here to there. That's why I give you options. One, this, you did not take profit, break even, get out. Two, 5 to 10%. It's all subjective, or 20%. I don't know what's a 5 to 10% from here, but that's a way to do your stop loss. Three, you're going to use candles. Anything that breaks above the big bullish candle, it means there's a possibility it's going to go to the upside, especially if there's a VWAP there. So those are the things that you could actually help you for your stop loss, Eddie. Okay, because it could go back here and vacillate back to the resistance, retest that resistance, and go back down. Right. But what candle is this? This is what? This is your support. This is your support. What are these? This is what? Is this a breaking candle, breakout candle, rejection candle? What is this, Eddie?
Like break. It looks like a rejection.
Rejection, very good. Because what do we have here? It's
a long wick.
Very good. It's a long wick. Once the level, when the price touches this level, what happened? The buyers comes in and push the price up, right? Yeah. So it means it's rejection. This is such a strong rejection candle. Right.
You wouldn't enter that. Right.
Yeah.
Not on a short.
Yep. So now what do we do? Now we exit our position because we did not take profit. Okay, let's go ahead and see what's going to happen. Ooh, see that? So if you did not have a stop loss, you just got roasted, Eddie, if you get for a put. Now, you got for a call. All right, this is another one. What do we have here? We have a pattern. What is a pattern again?
W.
Very good. And what are the patterns that I want you guys to learn? I am not...
W's, M's.
Head and shoulder.
Inverse head and shoulders.
Inverse head and shoulder. And an M pattern.
These are the most common pattern, right? I'm not favoring Eddie just because Eddie's here. It's just because he was here 1 hour early. So I was just telling him that, Eddie, if you see all these patterns, these are the most common patterns. I want you to learn them, practice them, because what do you use? What do you use? What are the patterns that you use every day? Or what are the patterns that you normally see every day when you're trading? These.
Those four.
Yep. Okay. So get used to it.
Yep.
Break out of the candle. Where's your take profit level? We're going to do 1. We're going to do 2. We're going to do 3. By the way, this is my scalping class. Free for you guys for today. See that? W pattern, Eddie, okay? And yes. Yolanda and Ms. Darius and Antonio and to everybody in here, Okay, those are the things, 4 patterns I want you guys to utilize or be good at it. I'm gonna give you guys a review when that happens. What about this? Where our homework is to study our inverse head and shoulder, our head and shoulder, W pattern, and the M pattern. And then next week, we'll go ahead and learn to identify these. And then you guys tell me what kind of pattern. If we're going for a call, we're going for a put. I think that's going to be our class on Sunday. So that's your free scalp swing class. So please practice that. I'm not going to go over it. I need you guys to practice. What I'm going to do is share you the screen and you identify the pattern. How's that? Will that help? Give you guys homework?
Yes.
I
Okay.
have one
Yes.
question, Miss Mary.
Yeah.
In the last candle, the big green candle, before that, is not a bearish divergence in the downtrend. A bear flag. Sorry.
This is not a bear
No,
flag.
before a bear flag. The big before the consolidation, there is like a bear flag there. Before
Who's talking here?
that one, yes.
Yeah. Yeah. Right here. Yep.
So it's not possible that the downtrend is continuing,
Of
or
course. Yeah. If you identify that trend, of course.
okay.
Yep. Look at that. Or it's an ascending channel. Ascending channel is also bearish. Another things that you guys need to learn, ascending channel and descending channel, or a bear flag or a bullish flag.
Okay.
Yep. This is an ascending channel. Another one that you need to learn. Although this is an ascending channel, but look what happened. It breaks to the
Breaks
upside.
out.
Yep. And you could also say, Mary, that's a weird W. Yeah, you could say that too. But it just depends on how you look at it. Okay.
Okay.
In that
Miss Mary, I have a question.
Yes.
Is there a rule of thumb or some kind of calculation to say if I'm going to swing for 3 days or for a week, I should use this chart? Like how do you determine which chart to use, which time frame to use?
You cannot say I'm going to swing for 3 days. It's not what you want. It's what the market gives you. Okay. So
Okay.
you gotta have to say, okay, I saw a pattern here. I saw a pattern. For example, this is a pattern. This is a pattern. Anything that breaks out of that, if I'm seeing this in the 5 minutes, I don't think this is going to be a swing because why? It's a shorter time frame. 5, 10, 15. These are shorter time frame for a scalping, okay? But if you see it maybe in the 30 minutes, normally we see a swing on the weekly, sometimes the daily too, because the weekly will definitely give you, let's say if you have a big pattern, right? And then you see a breakout, obviously this is going to take some time to take profit, right? So that's going to take a couple of days, or maybe 1 week or 2 weeks. But if you see this on the 1 hour, let's say you see a descending channel or a bullish flag, and you see a breakout of that, you could say maybe it'll take you sometimes the same day. You may need to take profit level because it goes to your take profit level number 1. But we cannot time the market how long this is going to happen. It could actually vacillate back and forth here, and then we break out. So you have to watch your chart. But if you're looking at the swinging, you could look at the 1 hour, the 2 hours, and the 4 hours. Sometimes the pattern could be seen on the bigger time frame, and those are the one with the big profits. If you look at the 30, the 1 hour, the 2 hours, normally it's just a small move compared to the bigger time frame. Like this one, this is on a 5 minutes. Obviously, this take profit level could happen today, right? Because it's a shorter time frame. I don't know if I answered your question there.
Yes, I didn't ask the question correctly, but you answered what I was trying to ask. Thank you.
And it's not like, okay, I'm holding this for 3 days. No, it's not up to you. It's really not up to you. It's not what we want. It's what the market gives to us. And the market is always right. It's not us.
Thank you.
Uh-huh. Okay. What else?
And for this environment, see profit, take profit. Don't wait for profit may not be around tomorrow.
Mm-hmm.
So if you see it today and you're happy with your goal for profit for today, take it.
Yep.
Miss
Exactly.
Mary,
You're
in the
right.
Miss Mary, in the descending channel, we saw that big spike, right? How is it possible, like, to get the big spike in the descending channel? Because it's a bearish channel, right? Descending means
Descending channel is not a bearish. Descending channel is bullish.
descending bullish.
Yep.
On
Descending
I
channel.
notice. Oh, sorry.
Descending channel is bullish. Okay. Ascending channel is bearish. Go ahead, Ray.
I noticed that we have this W or the double bottom position on under the pre-market, and then we had this green candle, this long green candle when the market opens. So is that okay to consider the positions like a pattern even on the pre-market before
Yeah,
the market opens?
of course.
Okay,
You can.
I always discard that because it always fakes out on you. Or
There's a higher chance it can, but that's the reason why you have to have stop loss, right?
right.
You have to have a stop loss. And with SOXL, we don't buy options, we buy shares.
Yeah, I've been buying SOXO for a long time.
Mm-hmm.
Actually, I started to buy it about a year and a half ago, like when it was like a little over $7, $8.
Nice.
And I was doing leaps on it.
Nice. I actually give you guys technicals on SOXL, and I give you guys the entry position. I don't know if you guys listened to that. That was a good one. We are now touching our resistance. As you can see, this is a triple top. 1, 2, 3. So we really need to reject this level, create a higher high. We are slightly overbought territory. There's still more room to the upside, as you can see. The highest it been was about 85. We still have room to the upside to continue. Let me just go ahead and delete that. Okay, so let's go ahead and use our Fibonacci extension. I'm using the most recent pullback. This has already moved 127%. So is there any more room to the upside? Yes, it looks like it wants room. We have a bunch of rejections though to the resistance, but it could get to 78 to 91. Remember, this is a 71.92. This is an estimate, okay? So I did not put this correctly, or at least just estimate. So if I owe $2, this is 64 bucks. So if I owe a couple cents or $2 or $1, this is just an estimate. So this is 71.98. You got 72.14. Close enough, guys. This is 70.86, $72, a dollar something. So it's not much. It's not much of a difference. It's an estimate. So higher chance it could get to.
You want me to make you want to come over or what?
Come on, we're done here.
It could get to $80 to 93. Is it bullish, Mary? Yes, it's still bullish. This is just a possible short pullback as well here when everything is just coming down. So if we measure that pullback, you could start from the red to the top. This is actually 60%. But Mary, I thought we don't use the red. We don't have to if you don't want to, but it just makes sense. It's a lower low, higher high, or we could just use the green. It's very windy in Florida today. That my hair is all messed up, but it's very windy. I don't know. Eddie, you're not here yet, right? But Mike is from Spring Hill. I don't know if but it's just so windy today, so windy and hot. And then I think it's raining now. So anyway, so this is a rejection candle. Pullback serves at 61%. Remember, rejection is good. Retesting this level is still valid. It means it's rejecting that 61%. Okay, so it's still a healthy pullback. There's no body of candle that dropped below the Fibonacci retracement. So If this is just a short pullback, there's a higher chance it still could get to $93. It could get to $90.
So it's recommended to place an order, a
No.
stop order
No.
above? No?
Oh, stop. I don't
Stop,
want you guys
stop.
to be entering at this position now, okay? It's too high. I've given
Okay.
this. Come on.
It was last week, I think.
Last week, yep, right here. So congrats. You know, guys, utilize this trade from Ertuan and MyTA because there's a lot of nugget here. So XOSL is sitting in the key daily support, currently respecting 50 MA in the daily. 49 to 50 zone previously acted as a resistance is now a support being tested. That called a change of polarity, which is now a buying opportunity. A possible entry can be currently at $50. The stop loss is given to you guys. 49.50 or 48, or using a 5 to 10% depending on your risk tolerance, or you can DCA this down to $44. It's all up to you. If support breaks down, downside levels are 44, 41, but here comes your resistance. Take profit. 59, 61, 57 to 59, 61, 63, 66, 67, 69, and 71. All right, what did it get? Do I owe you guys a couple of cents or at least a couple of dollars? And I get to 70, 86, 71, 98. I owe you guys 98 cents or I did not. So it's between 70, 86 to 71, 98. We did good. We did good with technicals. So when did we enter this? Last week. And this was a pretty nice level. I'm going to give you guys a little bit of a hint from the class that I gave on Saturday, on Tuesdays. Change of polarity. Buying opportunity. This is what I saw when I give you guys this technical. Is it risky, Mary? Of course it's risky. I'm peeing on my pants when I give you guys this. Why? It's such a bearish day that last week that I know nobody will believe me, but it's a buying opportunity, right? It's a buying opportunity. We have a stop loss at 49.50. Let's see if that's the first stop loss. You get to 49.33. So those people who got stop out, my apology, but it's not a problem re-entering this position. There's also a stop loss, I think, at $48 even, so you did not get stop out. But the point is, if you guys get stop out and then you got ended up having a green candle, you have another rejection candle, it means what? It's rejection candle. It's rejection. It's still reacting on that level of support. It's still pretty okay. I will definitely enter that position again. You only owe like what? You got stop out for like 70 cents or 30 cents. Guys, you're not a tree. You could re-enter that position again. Okay? So that's why I don't do a stop loss on my swing like automatic, because I have to watch it. Sometimes to those people who are afraid or beginners, you could do an automatic stop loss. That will definitely help you. But I always watch my candles. What if, Mary, if you're not watching because there's a swing, I have an alert. I put an alert in there.
No, but I mean a stop order above that candle, the green candle, about $55 to enter the purchase on 55 and expect to go up. I mean, because I don't do options. I only trade with buying the.
But I did not do options here.
I don't do options. I only place a ton of money buying the stock, not option.
I did not do options here either. This position was actually shares. I did buy options,
shares.
but I did not
buy shares, not options. So I mean that I will place a stop order about $55 when you give us the.
Oh, you got out $55?
Yes.
There's
A
nothing
stop
wrong with
order.
$5. You made money, right?
Yes. I mean, a stop order. Stop order. Not buying that the day that the green candle, about February 15, I think.
February 15.
Yes, that. I place a stop order above that candle, so the next day it will enter the order when the way the market is going up, at the trend.
But you could enter that position. My key here
Oh,
was an aggressive entry. That's why I got out
okay.
$50 even. I get out at
I
59. I got $9, so that's sweet. But I give you guys take profit level multiple time
okay.
level, and it was 57, 59, 61, and something 65, I think, all the way $71 as my last take profit level. So whoever
Okay.
utilize it, it's still bullish. As you can see, this is just a pullback. Half of that candle, there's nothing wrong with that. This is just a buying opportunity. It still exceeded. I need you guys to take profit in the top. Why? Because it's going to be double top.
Double top. Yes.
Yeah, so I don't like to risk. I'm like, okay, get out at 71. But Mary, there's gonna have an 80 level of resistance. You could actually get to 93. This is not guaranteed. This seems to be guaranteed. So why don't you just wait and we could re-enter again? This could be another buying opportunity if we measure this retracement.
Yes, that is what I mean. Where I can make a re-enter in that area, in the last area, the last zone.
As long as you respected these levels, it could actually pull
Yes.
back again. That $57 is still a healthy
Okay.
pullback. This is a possible
Okay.
rejection. This is a spinning top. This is indecision candle. So anything that above 64, at least tomorrow, 64. Oh, market's closed tomorrow.
Yes,
On
Tuesday.
Tuesday, as long as we remain above 60, I'll say $65, it's still bullish.
Okay.
It's still
And it
bullish.
can break the 70, 90, right?
Okay, it's not guaranteed. Okay, I don't
I know,
know.
but it
There's a
maybe.
higher chance, yes, if you respected that. So don't say, Mary, I'm buying it because you said it's gonna break. No, I don't know.
No.
Yeah, if I know, I'll be a millionaire, billionaires. I will not
Me
be
too.
here. I'll be like, okay, let's buy that. Let's buy that because I know where we're going. But no, nothing is guaranteed. But you use your retracement, your Fibonacci extension, where it's going. Higher chance, $88 to that $90. Okay, this is just estimate.
I wouldn't put a whole lot of money in there. Just think, especially with the double top you got over here,
Yeah,
almost so close to all time highs.
that's correct.
My shares are 135% up. So I was just looking right now. Just my
So,
average is $25.
what is your plan for that?
Just watch it. So
No, 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 no,
eventually,
no.
I'm gonna get
Race,
out.
you need to get out, okay? When you enter, not unless this is your long term, then you don't care. But every time you enter a position, you have to ask yourself, what is my take profit level? Otherwise, you're just
Well,
gonna have to see up and down in that profit. If that's okay
Soxo
with you,
Soxo is something that I've been riding up and down like for a long time because I do sell cover calls on it and
okay.
sell cash security put. So when it's down, I'm selling cash security put. When it's up right now, I'm selling cover calls on it.
So
So
this
I'm
is your
making
long
money.
term.
Yeah, it is a long term, and
Okay.
I'm always making either money either way.
Okay. As long as you know what to do with it, then that's fine. To those people who's entering this position, it's a swing trade for me, so I got out already. I did options as well, but I got out already on my position, so I don't have no more SOXL.
Yeah, the leaps that I had, I got out.
Mm-hmm.
So well, I got in at like around $8, seven something, and I think I sold when I was 30, 35, $40.
As for APP, I give you guys a resistance and support on APP. Agree? I did.
Yeah.
I actually did a Sunday class as well on APP. I think you guys could be able to see that here. And where's our Sunday class? APP. 2 weeks ago or 3 weeks ago, we had APP has a critical level of supports of 460, 461. It needs to hold above that. It did not. So where did it go? If 461 fails, price can slide towards 360, 368. Momentum continues. It could extend all the way to 320. Where did it go? Pretty much at 360. This was the first one. It dropped that 421, I think. What is it? 420. It got to 365 and then it got to 359. Owe you guys $1. So this is your supports. So this is a key level of supports. It was respected last time, 360. It got to 359. It created a lower low. What candle is this? Anybody is good with this candle?
Breakout.
This is a breakout candle, but it's also what? Another candle that I need you guys to learn.
Pearson.
Yep.
Pearson.
Good call.
Yeah. Pearson candle.
Piercing candle is in the downtrend, and then you have lower low, lower than the previous candle, but occupied more than half of the percent
More
of
than
the
half of it, yeah.
occupied more than half of the bearish candle. This is an early signal of a possible reversal. Early, okay? Early. Okay? Early. So we have a resistance lies above that, which is your resistance lies on 404, extended to 410. So that's your resistance. And then after 404, 410, we have 419 and filling up the gap all the way to 438. Okay, so we have 404 to 410 and then 419. $419 to $421. Arthritis, oh goodness. And then we have the gap right here. As you can see, we don't fill up the gap right away. Okay, we're gonna have a little bit of a hurdle on the 404, 410. Break out of that, retest this candle, and then the lower low of that spinning top, which is about 4. What is it again? 4 something. 438. Okay, this is going to be after reaching that 438, you have another hurdle to watch, and then we're gonna watch this candle by candle. You have a possible W pattern or a double bottom neckline. Take profit level. Okay. Well,
we can use the Miss Mary there the tool long position or and short position.
Yeah.
To calculate our stop loss and our profit.
I'll say stop loss right below. I want to be, because this could get to 320.
Okay.
You know, it could get to 320, but so far we're being respected on that 360. It created a lower low at 359, but still under the support. You don't want a candle right below 358. Otherwise, you're gonna have to DCA this down. Drop below the 358, we got that 320. That's really a strong support, that 320. Okay, so it's the good thing about this is you have you have a piercing candle reversal, an early reversal to the upside, and you have a double bottom. And then after that, you get to trade that gap, and then the neckline lies here. Possible resistance here. So that's a pretty good trade. A possible swing, or you could do APPX, I'm sorry, a little bit cheaper. APPX is the ETF. You need to have a stop loss. I want to be conservative with you guys. Stop loss at either $8 even or $7.50. Because it could get to what? It could get to $6.74. You could do a stop loss. Let's see. This is 8.11. Yeah, you could do stop loss on the 8 even, or you could have to DCA this down all the way to 6.74. But 8 even or 7.50 could be your stop loss. Does it look like continuation to the downside? Yeah, you have a possible rejections. Hopefully this is a rejections. Otherwise, we're still seeing that $6. Okay, we look at this W pattern, M pattern, double top, M pattern, neckline, continuation to the downside. First take profit, second take profit. It did. Okay, so just identifying the M pattern, W pattern, you just got your swing trade right there. All right, guys, always be kind, be patient, and may all your trades be in the green. So, did you guys enjoy the class?
Yeah, we did.
Yes.
Awesome. So I'll see you guys on Tuesday. Remember, we don't have to trade tomorrow. It's President's Day. It's President's Day, right?
Yes.
Yes.
Okay, and we do have a class tomorrow. Tomorrow, to those people who signed up for the leap and skip, please make sure you have all your link needed for your class. Okay, we start at 6 p.m. What is the
Miss
rules for
Mary.
stop loss area? Yes.
Miss Mary.
Yes.
Miss Mary, when we are scalping, do you use a bid price or market price usually?
Well, that is all depends on you. Normally when you do a market price order, your platform gives you the best available price. Normally it's higher. If you do a limit order, when you do a limit order, you get to control your entry position, your entry level. I'm sorry, you get to control your entry level. So sometimes the downside on that is it may not get triggered, especially if this is a strong move to the upside.
Yes, that's what always happened to me. But when I do the market price, I always like minus like $20 or $30 wide away usually.
Well, it's same thing with limit sell. I mean, limit order normally because it's pulling back. It's pulling back. It's pulling back. Just because you enter a position doesn't mean it's going to go to your favor right away. It's going to fluctuate. So you got to have to suck it up and watch the candles. And hopefully, not hopefully, if you enter the right time, then it's going to go to your favor. If you enter aggressively, expect fluctuations. Okay.
Okay, thank you.
You're welcome. Shafiq, if you're new to the Discord, welcome to the Discord. And yes, this is part of the Discord and also my YouTube channel. And if you would like to register for a class, you have to go to Discord and get that link from Tom. I'll go ahead and send you the link. I could definitely send you the link, but please go to the Discord.
Can you send me the link to Miss Mary?
Yes, I'll send you guys the link. I'll tell Tom to email you guys. Just put your email in there, and or I have the link for you guys. Have the flyer. You guys should be able to have that flyer there. And yes, this is being recorded. I will put it on our Discord on a Sunday class. Okay. Okay, I think
Oh, do I need to email you for the link first? Is that what you said?
No, the link for what? For the class for tomorrow?
Yes.
No, I could put it in the Discord.
Okay, thank you.
Miss Mary, when will be the next beginner class? My beginner's class will be on the 21st at 3 p.m. Hey, why don't you guys email me instead of you guys email me? To those people who took my class on scalping, remember we have a free live trading for you guys so you could utilize what you learned from me on Wednesday. So we have so my students who took the scalping class, that 43 students, I'm expecting you guys to have that link already available. It's already available. So it should be, you guys should already receive that email. If you don't, please email me because we do have a live trading for scalpers on Wednesday the 18th, 9 a.m. Please email me asantiago_1@yahoo.com instead. Okay.
Miss Mary, I took it on January 20th. Can I be participate too?
Did you participate on last time?
Yes, I did.
Normally that's for my second round, but I think I invited my last beginners class. I want to show off my second beginners class. I mean my scalpers, because I think the scalpers is pretty aggressive, and they're gonna show you guys what they did. So I want to see who got the best group, either the last group or this group. Let's see. So you got
Okay, we got
yes.
okay, thank you. I will email you to get the link. Thank you.
Yeah. All right, guys.
Thank
Thank you, Ertuan. Thank you, Tom. Thank you, Race. Thank you, Eddie. Thank you, Michael. Thank you, Winnie. Thank you, Antonio. Thank you to those people who are here with me. I know Money Mike is live. He's going to give you guys technicals of your favorite stocks. I'm going to do a short video for the stocks today, too. So watch it in my YouTube. I'll do an APP as well. Okay? All right. Have a great night. Grace, I hope you feel better. Yolanda, thank you again for your generosity and kindness. It just melts my heart on Valentine's Day. I hope each and every one of you guys had a great day yesterday with your spouse, with your partners, with the people that you love. And remember, you stay with the people that fills your life with lots of love. Okay? So we don't want to be around negative people who doesn't help us to improve, who doesn't help us improve. Okay? We want to be surrounded with positive people so that we could be better every day. Being better every day is better than not progressing. Okay, so it's always good to be at least 1% better tomorrow than today, 1% better today than yesterday. Okay, a small progress is better. Bye, Doris. Raise, once again, hope you feel better. Thank you, Ertuan. Thank you, Tom. Oh, Tom is not here. Thank you, Big D.
Thank you, Miss Mary, for everything.
You're welcome, Raise.
I will see you on Tuesday.
I'll see you guys Tuesday. We have
Yes.
a power hour and we have a morning huddle on Tuesdays, okay? And it's going to be live for my YouTube subscribers as well. So I give them free live trading every Tuesday morning for my YouTube subscribers. Thank you, guys. Bye, Miss Clarice.
Thank you.
You're welcome.